Good morning, I'm Ed Parrott. Welcome to Knoxville Real Estate Weekly. The Federal Open Markets Committee had their meeting on Wednesday, and to no one's surprise, they decided to leave the Fed funds rate steady for the time being. So while this is a welcome pause, it is, in my thought, a hawkish pause. First of all, the reason I consider this a hawkish pause is Fed Chairman Jerome Powell is determined to get inflation down to the 2% target. Right now, it's running about 3.2% in that ballpark for the CPI. The Fed funds rate is currently at about 5.5%, and while it is certainly having an effect, it has not had as much effect as Chairman Powell is looking for. And in his remarks in the press conference, he indicated that we can anticipate one more rate hike this year, which most people are thinking will be 25 basis points. And also next year, the Fed was previously thinking there would be 4 rate reductions. Now the word is it's only going to be 2 rate reductions next year, and they're not really anticipated to be very large reductions at that. So this has had quite the effect on both the stock market and the housing market. First, let's take a brief look at the stock market. So if we look at the Dow Jones, on Wednesday it opened at 34,607. The thing I really don't understand is it had a little rally going on Wednesday and got up as high as 34,766 before pulling back a little bit. But then when the Fed made their announcement, the bottom dropped out and it went on a steep decline and closed the day at 34,438. Then on Thursday and Friday to finish out the week, it kind of struggled along, maintaining about the same rate, dipping down on the close on Thursday. But then it closed the week at 33,963. Moving on to the NASDAQ, it opened Wednesday at 13,692 and remained pretty constant throughout the day until the Fed announcement, and then the bottom dropped out of the NASDAQ. It went down to close Wednesday at 13,341 and continued on to close the week at 13,211. Finally, taking a look at the Standard & Poor's 500, it opened the day at 4453 and stayed fairly constant until the announcement, when it took a pretty good dive down to 4367 and continued on kind of steady, but did close the week at 4320. In addition to the effect on the stock market, this also put pressure on the yields on bonds, pushing them higher. And as a result, mortgage rates went higher as well. A couple of weeks ago, we had a recent high of 7.49% on the mortgage rate. And after this announcement, it popped up to 7.47%, almost back up to the recent high. I would not be surprised to see it go above 7.5 next week. Taking a further look at the housing market, builder confidence took another hit. For the second month in a row, builder confidence has declined, and the index is now below 50. That's the first time this year the index has been below 50, and that is officially bearish territory. The last time it dipped below 50 was December of last year. This drop in confidence is reflected in the number of housing starts, which was down again in September. It came in down 11.3% at an annual rate of 1.3 million units. Of note, however, is the fact that single-family home new starts only dropped 4%. And this reinforces my point I made a few weeks ago, that buyers still are out there, there's still buyer demand, but because of the the extreme lack of inventory on the existing home market, buyers are going to new construction. So that's one kind of bright spot, although the builders, even for new construction, are losing a little bit of confidence. Also in August, we saw sales of existing homes drop to 4.0 million units, which is about what we expected. At the same time, the median sales price for existing homes increased to $407,000, and that's a 4% year-over-year increase. A figure I commonly see bounced around as a projection for year-over-year increases for the coming 12 months is about 4.9%, which, given our elevated level already, is higher than I would like to see, but it's certainly a lot better than the 9% it ran last year. The effect of a 4.9% increase, if it holds, would be a average increase of about $20,000 in the price for an existing home. Now, this could make some people feel pressure to go ahead and buy before the prices go up again, and it may in fact disincentivize sellers because they think if they hold on a little longer they can get even more money. And of course they're still looking for an interest rate drop so that they don't have a big increase from the amount of interest they're paying now when they sell their existing home to what they're going to be paying on the new home. As I mentioned last week, I was talking with Janine Stone with Bay Equity, and she indicated that she's seeing a lot of people that are selling and then buying a new home are winding up paying about $800 per month more on their mortgage. And in some cases, this puts them out of the qualification range, so they're going to have to find a cheaper home somewhere. Another figure of note is the number of contracts that are being canceled before closing. It's currently standing at 15.7%. So for last month, that was 60,000 homes under contract in the country that for one reason or another fell through and did not make it to closing. The last time the cancellation rate was this high was October of 22. Pre-pandemic, the cancellation rate ran from 12 to 14%, so we are currently higher than the previous cancellation rates, but not that much higher. Taking a look at realtors' confidence, the NAR did a survey, National Association of Realtors, and only 13% of realtors nationwide are expecting an increase in buyer traffic over the next 3 months. 11% are expecting an increase in sellers over the next 3 months. You can't count me among that 11%. Unfortunately, people just are not wanting to sell right now. Taking that into consideration, homes that are on the market, competition for them is ranging anywhere from high to fierce. In August, homes had a median days on market of 20, which is lower than the Knoxville area. As I mentioned, we're at 30 here in Knoxville. 72% of the houses that sold in August were, in fact, on the market less than 1 month. And I find this a relatively strong number, and I guess the younger folks are making more money these days, but first-time home buyers accounted for 29% of the purchases in August. Of course, if I think about it, that doesn't necessarily mean young. People may wait till their mid-30s to buy. I'll have to look into those numbers and get back to you. Also of note is cash sales continue to be a large percentage. Right now we're running at 27% of the purchases are all cash. And in fact, the last 3 deals I have done have been all cash. Also of note is the number of homes that are selling for above the list price. Currently that was 31% in August. Now, I need to dig into that a little further because I think it probably holds true for most of the nation. Here in Knoxville, the initial list price is creeping upward. I don't remember the exact number, but it's like 0.4% per month, in that ballpark. But by the time the home gets under contract, it's not unusual to have 1, 2, or even 3 reductions in the list price. So is this 31% over the current list price or the initial list price? Again, that's a number I'm going to have to do a little research on and get back to you. I'm thinking it's more above the current list price at the time the contract's written instead of the initial list price. And another thing that indicates to me the market is softening, and I'm hearing this from other folks around the country, here in Knoxville we're seeing a lot more open houses every weekend. 6-9 months ago you just didn't see an open house. I mean, it just wasn't done. But now there are lots of open houses, and I am seeing a lot of, we're calling them price adjustments these days. We used to call them price reductions. Same thing. I've seen some people call them price improvements. Semantics. We are still seeing multiple offers on homes. Back in January of 21, it stood at about 3.7 offers per house that was sold. And then around April of 22, it peaked out at about 5.5, and then it kind of dropped, and now it's trying to struggle back up. And currently it's standing at about 3.3 offers per home on average. So as I say, buyer demand is still there. And in fact, I have one under contract that will be closing next week, and I represent the buyer, but I know for a fact there was at least one other offer on that home. So at this point, we'll add in a few comments from the press release from the Open Markets Committee meeting on Wednesday, the Fed. They say the economy is expanding at a solid pace. It was moderate before. The job market is strong, and that's changed from robust before. And you'll remember I mentioned jobs added in June was 450,000, and August was 187,000, if I remember correctly. So, quite a drop, but they're still saying it's strong. And the Fed says, we're watching the data to see if we'll need to move rates higher. Well, they've already pretty much said there's going to be another increase this year. They say inflation is still too high and the target is still 2%. In terms of their individual forecast for where the Fed rates will go, their median forecast for the end of 2023 is 5.6%, which remained the same from their last release. And this implies, as I said, another 25 basis point hike before the end of the year. And for the end of 2024, their median forecast is 5.1%. It was previously 4.6%. You'll remember they changed their number of reductions next year from 4 to 2. And that means we're now looking at 2 rate cuts in 2024 versus 4 previously. The implication is that rate cuts will come later, if at all, in 2024. We're all happy that inflation is coming down. It's slow, but it's coming down. But the Fed wants it to come down a lot more. Currently, it's, I think, about 3.2% CPI, and they're looking for 2.0%. So, we're going to have to hang out a little longer. So while I was a little more optimistic last week, I think it's time to bring out the bucking bronco again, because we're still in for a wild ride for quite some time. So thanks for stopping by. I hope you enjoyed the program. Hope you got some interesting information out of it. If you did receive some good information, be sure to press like and subscribe, and I will be back with you again next week. Until then, have a great week, everybody.